How to read a profit and loss. My name is George Benaroya. I worked at Procter & Gamble, Tetra Pak, Nivea, and now private equity as Vice President of Finance, Global Controller, and CFO. This material is from the graduate class I teach at NYU. First, what is a P&L? A profit and loss, or P&L, is a statement that summarizes the sales, cost, and expenses during a period of time, a quarter or a year. This is Apple's P&L. Later on, we'll see that different companies will use different terms. The three most common ones for P&L are shown at the bottom. Can anyone make a P&L? Can this farmer make a P&L? Well, her sales will be what she gets for the tomatoes, the lettuce. The cost will be what she paid for the lettuce, the tomatoes, and so on. And her expenses will be the rent she pays. It'll be pretty easy. Can this gentleman make a P&L? Yes, anyone can make a P&L, and we'll see how easy it's to make one. Why would you want to use a P&L? Isn't it boring to be doing all that stuff? We'll see in 2 minutes how to actually make it fun. A P&L will enable you to sell more units at a higher price with a lower cost. The farmer, for example, will be able to tell when she sells more tomatoes and reduce her waste. A P&L will enhance your credibility. If you know your sales, cost, and expenses when talking to investors, you will sound more credible. And you will also meet local regulations. How much does it cost to implement a P&L? I work at global companies doing business in 180 countries. We use SAP. The full implementation cost was $100 million. A mid-sized company can use Oracle's NetSuite for $100,000. A small business can use QuickBooks for $100. The farmer we saw before can use a piece of paper and a pencil for $1. If you're a student, you have something much better than a piece of paper. You can download Microsoft Office, including Excel, for free. Let's look now at how you can read any profit and loss. There are 3 main sections of a P&L: sales or revenue, cost of sales, and expenses. I show in green what it's good and in red what it's bad, so that it's easier for you to visually remember it. The difference between these 3 items, it's called net income or profitability. And of course, there are different names. Again, sales may also be called revenue, and net income also has other terms. Let's practice now how to read any P&L. What we want to do is to break what we're looking at into those 3 pieces I just mentioned. Example number 1, Apple's P&L. First, net sales. Second, cost of sales. And third, expenses. To make it easier for you to do the math, I added the percentage of net sales, but you can look at the full dollar amount on the right-hand side. Now, the difference between these 3 items will be the net income. Example number 2, this is P&L. Disney is a service company, so they refer to sales as revenue. Item number 1, revenue. 2, cost. 3, expenses. And the difference, again, is a net income. Example number 3, Estee Lauder's P&L. They will show the data in a different manner as a percentage, and they will call the net income net earnings. First, net sales, second, cost of sales, and third, expenses. The difference, the net earnings, net income, or profitability. We have now seen 3 different companies showing the data in a different manner with different terms, but for any company, we were able to break what we were looking at into these 3 main drivers and understand the performance of the business. Let's see now how to make our own P&L. This is based on a true story. The picture here is of my classroom at NYU. Jenny is a student at NYU and runs a high-end shoe business on the side. A friend of hers produces high-quality, made-to-order shoes, which Jenny sells for $1,000. The cost to make each pair is $300. Once per month, after taking the finance class, Jenny goes to Newark, gets on an Emirates flight for a reason, visits her mom for a reason, collects 10 pairs of shoes for a reason, flies back to New York City and sells the shoes on Saturday to these wealthy shoppers. Oh, Jenny also turns all her homework on time. Let's do Jenny's P&L together. We said that she sells 10 pairs of shoes in her apartment for $1,000 each. So her sales are $10,000. We said that she buys the shoes from a friend in China at $300 each. So her cost is $3,000. And we also said that she flies in business on Emirates. So her traveling costs are $4,300 or 43%. You will see on the next slide that these ratios have a reason. And so the difference what she gets to keep is her net income or profitability of 27% or $2,700. Let's now look at the P&L of a competitor. Jenny has a benchmark, and that is Coach. And we will see that they have the same ratios as Jenny's. First, we look at revenue. Second, cost. Gross profit equals revenue minus cost of sales. And when we do the math, we see that their cost of sales is also 30% like Jenny's. Third, expenses. We see that their SG&A or expenses is like Jenny's 43%. At companies, we do this type of benchmarking to decide how much to invest in advertising or whether to fly business for that matter. Finally, the difference, operating income or net income in the case of Jenny, is also like Jenny's 27%. We have learned the process to analyze any P&L from any industry and how to make our own P&L. On the next video, we will also learn how to use a balance sheet to increase profitability.